or citizen, more than likely you don't have any financial ties that we can actually do run. But if you have any questions, feel free to call us. On the chat, for those of you that haven't gone in, there's a link that's going to have the CD that we're going to be going over today, so you guys can follow through. If you want to print it real quickly, you have a home printer, or you're at your office, you can print it and follow us that way. You'll be able to see it on the screen in any case, but if you want it physically, you go ahead and do that. We'll also send you the recording after this is said and done. We'll go ahead and send it later on to you guys so you can have it as a reference as well. And there's a form there as well for you guys to go ahead and sign up. We have classes like this on a regular basis. So if you want to be part of our list, we would love for you to sign up, and we'll go ahead and send you anything that we have upcoming. So I don't want to take more of your time. The person that's going to be doing the class today, her name is Ingrid Horta. We're very happy to be working with Ingrid. She's one of our newest members here in the company, and she comes with a lot of experience. She's been doing this business for a long time, and she's done from A to Z. She's actually one of our mobile notaries too. She goes out to different locations as well. So, you know, one of the ways that we work here, we try to make it as easy as possible for everyone. We work as a team environment, and because we know that when everyone is happy, we get more referrals, and that's basically what we want to try to get. You know, our business is, it's very hard to get customers, and we want to make sure that they're happy when we get the transaction in. So Ingrid is going to be going through this closing disclosure form. She's gonna, I think, well, there she is. She's on the line on the video. Hi, Ingrid. So,
Can you? Hi, good afternoon.
One thing that I also want to say is we're not tech savvy here. This is kind of new for us, so we're a little uncomfortable talking to the cameras. Most of you are probably, and you know, if we have any issues or anything, just please forgive us and work with us. You know, we're trying our hardest here. So Ingrid, go ahead and start your presentation.
Well, good afternoon. Thank you for joining us. We're going to be discussing the closing disclosure. I know that this is very important for you guys. You know, your realtors need to know this. This is the Bible of what your clients pay. And I would love to, you know, explain to you the differences of what the charges are and what they need, what applies to each client. So let's start. Let's get this going. If you guys have any questions, we will have, you guys can text me the chat and let me know what questions you have, and I will answer it accordingly. Thank you. Okay, so we're gonna start. We're gonna learn to navigate the closing disclosure form. This is for all transactions except a cash deal. For a cash deal, you would see a HUD-1, but we're gonna be discussing the closing disclosures for lenders. So we've been established since 2000. I've been in the title business since 1994. That will tell you my age. And we've been doing this for a long time. We've seen it all, the in and outs of the business, and we're here to guide you guys to make your transaction successful. So we're going to review and again, you have any questions, just do it through the chat and I will answer them as they come in. Thank you. So this would be your first page of the CD. Okay, the CD kind of runs backwards, but we're gonna go the traditional way forward. And this, the general idea, the closing date, the buyer, the seller, if it's a purchase, if it's a refi, in your case, it would be a purchase. If it's a conventional, if it's an FHA, if it's a VA, it just gives you the sales price, the loan amount,
Audio is gone, guys.
Okay, I think we're having some audio issues. I don't know if you guys can hear me, but we're trying to fix it. So bear with us 1 second, please.
Pick up where we left off, going over the disbursement dates and the settlement agreements and move forward.
I'm back, guys. Okay, so then this particular part of the form has your property address, the sale price, the borrower, the seller, the lender, and then the loan information, which is very important to your buyers. If it's a 30 years, if it's a purchase, fixed rate, conventional FHA, VA, and then the loan numbers. Then down in the loan terms, we'll give you the loan amount that the lender is lending the borrower, the interest rate that is given to the borrower, and the monthly principal and interest that will be given to the borrower. Remember, this is just the CD. Okay, then you will look down and it tells you the estimated taxes and insurance and assessments, meaning, okay, this right now is the prorations of the taxes, and if it's an FHA loan and property insurance. This never includes your homeowners association. This will tell you, okay, that it's property taxes, homeowners insurance, and that's it. Okay, so whenever you speak to your client, if there is an association involved, this number will never have that additionally added to it. So that would be a different fee. Okay, then here, like I said, this disclosure is the first page and the numbers come backwards. Okay, at this moment, this closing cost will be $21,111.93. This is what this buyer has paid for purchasing this home at this time. No, the cash to close. Bring them up.
Oh, the cash report on the bottom?
Yeah.
Got it.
Read it. In this transaction, if this would be your buyer, at that moment, he would have to bring to closing $48,011.74. This is what would cost this buyer to close on this property on the day of closing. Okay, now we're gonna go to the second page. Now this becomes a little funner. Okay, these are the closing costs. This is pretty much what your lender, your title company, recording fees, all the other fees that are involved in the transaction. This is where you're gonna see it. This is where you're gonna see everything itemized. Line A, if you see it says A, 1, 2, 3, okay, loan costs. This is always a lender cost. These are what your lender have charged your buyer in order to close their property. In this transaction, this lender, okay, charged the client 0.562 of the loan amount, okay? So this client is paying $2,642.81 to the lender for this particular loan. The second line, line 2, is a processing fee, which is charged to the buyer from the lender. In this transaction, it would be $500. The underwriting fee. The underwriting fee, wait, we have a question. Hold on, let me see. Would discount points be there also? Yes, yes, absolutely. The discount points will be there also, yes, yes. Then we have an underwriting fee. This is what remember, these fees vary. Not all the lenders are going to charge you these fees. This is depending on the loan program that your buyer has been approved for. This is this particular transaction. So in this transaction, this underwriting fee is $995. If you see, okay, in the line A, you're gonna see a total amount. You're always gonna see. So in this transaction, the lender charged the buyer $4,137.81, okay, for this particular loan. Then we go to B. Services borrowers did not shop for, meaning that they didn't have the opportunity to shop for it themselves, meaning that the lender had priority pick. And at this point, the appraisal fee was paid out of closing. If you see line B1, okay, that is because the reason it's not in the same column as the other one is because this client paid the appraisal outside of closing, and they paid $555. So anytime you see a fee in the column that says before closing, it means it was paid outside of closing, meaning that it was already paid for, so it's already giving them a credit at the CD at time of closing. Okay?
There's a question.
Which is the question?
It says that will the discount points be considered a discount point, like would it be labeled that?
It would say discount point, yes.
Okay.
It also depends on the terminology that your lender uses. They use different terminologies, but if it's a credit or a discount point, it would have to come out that way. So in this case, it's $80.71. And then we have Then we have the flood certification, which is $9. Now, if you see in line B, 1 through 10, all the charges, this client is being charged $644.71. So this is what they're paying for this particular product in this particular transaction. So we have line C, services borrowers did not shop for, meaning not that they did not shop for, but it was that the services borrowers did shop for, meaning that they had the opportunity to go outside of their lender, that they had the ability to be able to look for their own title company, or to have the ability to look for their own survey company, to have the ability to look for their own insurances, or whatever it is. So this is why it's in this trend, in this part of the CD. And this shows you that the survey is $750. Okay, now surveys are usually not that expensive. We're talking about a big property, so it's a little bigger. It all depends on the lot and the block that they're purchasing the property. So surveys vary between $400 and $700-800. It all depends on the lot that you're talking about. So in this transaction is $750. Then we have, these are all title service fees. Then we have your abstract. It's very important that we do an abstract, because that is what determines what's wrong with the property, if anything is wrong. That is our search. That lets us know how many mortgages, if we have any liens, if we have any judgments, if we have any code enforcement. That tells us all the stuff that's going on with the property. That is the report of the property, and that is the way we issue clean title to our buyers. So it's extremely important that this is done, okay? And this charge, depending on your contract, okay, it's charged either to the buyer and the seller. In this instant, it's charged to the seller, which is $150. Then we have our endorsements. These are required by our lender to issue title insurance. Florida Form 8, Florida Form 9, it's always very important. All lenders require it, and we give it at the minimum rate, which we charge, which is $25 per endorsement and 10% in Florida Form 9, which is very important for you realtors because these are fees that, you know, cannot really change because they're promulgated rate from the government, okay? So in this transaction, we're doing the Alta 8 for $25 and the Florida Form 9 for $262.50. Now, in this particular transaction, the lender's title insurance, which is promulgated, again, that's Florida law, promulgated, is $2,426.50. Now then we have the title settlement fee, which is $8.99 to the buyer, and then obviously you have a charge to the seller for $6.50, a wire fee for $35 to the buyer, and a seller wire fee for $35. Yes. Then we have the doc stamps. We're in Florida, we have many counties. Miami-Dade is particularly a little different. We only pay 60 cents on the deed. Broward and up pay 70 cents. It depends on the county. Like I said, Miami-Dade is 60 cents on the $100. And this is, number E is the recording fees. This is to record the mortgages, to record the deeds, to record satisfactions, to record any pending items to clear title. This is the section where it goes to the administration to Miami-Dade County or Broward County or whatever county we're closing with. In this instant, we have a deed that we're charging $23. Yes. Okay, in this transaction, we're doing a deed for $23, okay, and then a mortgage for $99.50. So this total is $122.50. Now the clerk of courts for the stamps are charging us $940.50. And then the state tax of the clerk of courts for the buyer is $1,646.05. So this buyer is paying to record his mortgage in Miami-Dade County $2,709.05. Now the seller also has a fee to record the deed in the county that it belongs to. In this transaction is $3,030. And that is to record in Miami-Dade. Now, line F, prepaid. This is everything that you're paying up front. Mortgage insurance, not happening here. This is homeowner's insurance. Homeowner's insurance is paid a year in advance. So they make sure that the insurance is always paid ahead of time. So in this case, they're charging one full year, okay, $3,884.97. Then they're charging in line F3 a prepaid interest of $43.48, well, 48.22 cents per day from the day of closing, which at this point is the 17th, to August 1st. So this client is paid interest from the date of closing to August 1st, $652.23. So they're paying for their insurance and their prepaid interest to the lender in the amount of $4,537.20. Line G is the escrow payments. Everybody always wonders about these escrow payments. What are they? If they collected the insurance for a year, why are they collecting escrows? I hear it all the time. This is the cushion for the lender. This makes the lender feel that they are relaxed, that they can pay. They're holding upfront, depending in a year where you close. If you close early throughout the year, they're going to collect less escrows than if you close later through the year, because they want to make sure that they have enough money when the taxes are due in November, that they have enough money to pay these taxes. Hold on, I have a question. Okay, I will answer your question in a second. Okay, so what happens here is that they're charging this particular situation. The lender is requiring 3 months of mortgage escrow, homeowners insurance held back. So they're actually getting from the buyer $323.75 for 3 months. Total cost $971.25. That particular insurance is for when their insurance is for renewal the next year, they have enough money to be able to pay it and not go back to the buyer and raise their mortgage to tell them that they were low in escrows. So that's why they try to get a few months ahead so that they don't have that issue in the long run. Here, mortgage insurance, but they don't collect any prepaids for mortgage insurance. And then you have your property taxes, which in this case, the lender is charging 11 months of escrows at $407.31. So this particular client is paying $4,480.41 in taxes, okay, for the escrows for the next year of the taxes that are due, okay? Now, the aggregate adjustment, that's always a credit to your buyer. If you see the little negative sign, that's always a credit to your buyer. So at this moment, this lender is crediting the buyer $1,295. Okay?
Before we move to the next section, this is about that topic. It says if prepaid interest in F03, so that means his next mortgage payment is on October 1st. What happens to the rest of September interest until
That's not to
September
October
30th?
1st. No, September 1st.
Yeah. So it says it means his next payment is on October 1st.
No, his next one is September 1st. That's the next payment.
Okay,
On this
so
one.
just from that's incorrect. No, the next payment.
The next payment would be September 1st.
Yeah, it's not October 1st.
Yes, it would be September 1st because they collect for 1 month. Okay.
Based on the monthly taxes and what the adjustment is on the mortgage and the taxes for that year. But let's continue then, and we're going to H.
Yes. So H is very important for you guys.
Okay, let me ask you something
Is where
before.
the realtor fees are. And even though you give us a contract, things change throughout transactions. So this is where you get to tell us, yes, we went from a 3 to a 2.5. We went from a 3% to a 2. It all depends. This is where you guys need to focus on. Okay, if you have a broker fee, a transaction fee, a technology fee, this is where you would see this particular fee. So you always have to make sure for your buyer and your seller that you have these fees, because I know that your brokers charges them at time of closing. Then you have to make sure that your percentages are correct, that we got the right percentage, even though we do it because we're here to help you, we're here to make the transaction work, we're here to do a due diligence job. You also have to review this to make sure that if something changed, that we're up to par with it, and that we are able to make sure that you guys get compensated accordingly. And this is where it's very important. Okay, so in this case, this client was charged $15,150 for listing agent and $15,150 for selling agent. So that's what they're receiving. Also, another very important thing is the lien search. Lien searches are extremely important and it varies from city to city. Hialeah, you need a post-occupancy agreement. Miami Gardens, you need a post-occupancy. You have so many different municipalities that require different satisfactions in order to close. And how we know how to satisfy these requirements is by our lien searches. If there's any code enforcements, open permits, trash outside, anything, this report will let us know what's going on with the property. Because remember, guys, we don't see these houses. The only way we know what's going on is by these reports, okay? And they're very essential and very important. And they go between municipality. Every municipality has a different fee. And now with the COVID-19, they're taking a little longer and they're a little bit more expensive, but at least they're getting it done. So that's very, very important.
We're still covering for great fee.
And
We're still covering it for great fee.
yes, and we try to find lien companies that work with us and provide you good service and a good fee. Okay, then we're gonna go to stormwater utility escrows. Here, they're escrowing another thing. FP&L. It does not lien your property. No, we will never. A title company will never charge escrows for FP&L. Nothing like that. Water and sewer. Water and sewer is 100% lienable. And that's the reason it's so important. And that's the reason title companies hold a water escrow holdback. Because if we miss $1, that can become lienable and come back to the client and ourselves. So we always collect $250 depending on how the bill comes, and it's 100% refundable back to the client as long as we receive a final water bill from the seller. That way we make sure that that utility service is at 0%, there's no liability, and they receive full escrow back upon that documentation. And that we do from transaction to transaction, again, depending on how the water bill came out when the lien search was received. Now we have owner's title insurance. This is something that's charged to the buyer. This is title insurance. This is owner's. This is something that insures them in the future, that if anything comes up on title, that they have some sort of insurance to back them up. This is only paid once in their life throughout the purchase of their home, throughout the ownership of their home. This is not a recurring fee, an annual fee, a monthly fee. This is a one-time fee. And in this case, it's $198.50. And this is the best $198.50 that this client will ever spend, because it keeps them sleeping at bed at night without worrying, God forbid, if in the future, if anything happens. But we're here to make sure that that doesn't happen. Okay, then at the end, we have another wire fee for $35. Okay, and this is to the buyer because we have wire fees that are coming in, the lender fees, the lender wire, the buyer's wire, you know, the buyer's deposit. So we always have wires coming in, and this is a fee to the buyer. And this is just calculating your cash to close. If you see, there's a side where it says loan estimate. When your mortgage broker meets with your buyer, this is what they estimated your buyer that he had to have, his total closing cost, his down payment, his deposit, if there was any credits by the seller, anything adjusted to it, and what they would have to bring. And at the right side is their final numbers, what they actually brought to closing, what they actually paid before closing, what they actually put down for closing, what they actually put down for deposit, if there was any credits added, and the cash to close that your client did bring to closing for the purchase of his new home. And now this one is the most complicated one. the prorations. This document here tells you the sales price. Obviously, we need to know the sales price, the cash to close. Okay, so in line K1 would be the sales price of this property. Line K3 would be the closing cost to your buyer in this property. Then we have adjustments for items paid by seller in advance. This right here in this section is always going to be a credit to your seller. This is something that your seller has paid ahead of time. And most time, you're going to see it with the trash, the garbage, the recycling, which is called non-ad valorem. That's what we call it, okay? And in this case, the client paid it from July 17, 2020 to September 30th, 2020, and your seller is getting a credit for $99.18. You will also see any rent prorations here. If it was an investment property, you would see associations, if they paid the associations ahead of time. So anything that's in this particular box is always a credit to your seller. Then we go down to L. And this is the deposit that your buyer put down. In this case, the deposit was $5,000. Okay, and the lender loaned them $470,250. So these are all credits to your buyer. This is what's crediting in the favor of your buyer. Okay, and then the right side would be your seller, but we'll go back to that. In this transaction, your taxes, which would be adjustments, items unpaid by seller. This means something that the seller has not paid, something that the seller owes. In this case, taxes are due in November. So the seller obviously have not paid for the taxes due. So they're crediting the buyer from January, because it always starts from January, to the day of closing and what the taxes are. So in this case, they're giving a credit to the buyer for $2,394.37. So now this is a debit to the seller and a credit to the buyer. Okay, now we're gonna go to the right-hand side, which is M. And M shows you the sales price, because we need to give the credit, we need to credit the seller that he's selling the property for $505,000. Okay, this particular transaction is costing the seller $34,565, and this is line N2. He has, in this particular case, two mortgages, one for $231.03.02, and a second mortgage for $15,000. So this is a debit to the seller from his proceeds. And here, remember we spoke about the prorations and the taxes that are owed. The seller is owing the buyer $394.37. But this is already taken out of their proceeds, when their net proceeds when they receive it at time of closing. Remember, this is like a receipt of all the fees that have been paid.
Moving forward.
No, go down. I need to go down more.
The calculation.
I needed to go down, yeah. Okay, in this particular transaction, okay, the cash to close for your buyer. Give me 1 second. I do apologize. In this particular transaction, the cash to close from your buyer is $48,011.74. This is what your buyer would have to wire the title company at time of closing to fund the transaction. In this case, your seller will be receiving $222,136.79. Remember, All these fees have already been deducted from any fees that he would have to pay. So that's what he would be wired at the day of funding. These are additional information about the loan disclosures. This pretty much this is for the lender. This is not really for us. This is for the lenders to see what they have escrowed in property taxes, what they have, what the initial escrow payment is, what their monthly escrow payment is. So this is more of a lender type of part where it's for the lender to disclose to the buyer what they're paying in insurances and in taxes and in escrows. And this beautiful part is the last part of the disclosure. Well, we have another part, but this is what replaced the truth in lending. This gives you, you know, if your client wants to know, this is what they pretty much paid for the purchase of their home through their 30-year loan. And this shows you their total payments, their finance charge, what they financed, the annual, not the monthly, the annual percentage rate, okay, that they paid throughout the year, and their total percentage through the term of the loan. So this is just if they want to get more technical about, you know, their investment and what their loan actually turned out to be in 30 years. So this just breaks it down for them. And this is the last page, which is all the information of the person, the lender, the mortgage broker, the realtors that assisted, and the title company. And this is just all the basic information if you ever need to have your client reach someone, or if they call you and say, oh, who did my closing? I need a document, or I don't know who to pay my mortgage to, or who is my realtor, or whatever question they might have. This is the page where it gives you all the emails and phone numbers and all the direct contacts to the person that actually helped them through this transaction. And at this is just the receipts of everything that was paid off from the seller. Remember, we had 2 loans. So this just shows you what the seller paid off, that they paid off their first mortgage loan of $231,0302 and the second loan of $15,000. And this is a receipt for your seller to see what he paid off at time of closing.
Fernando.
All right. Well, thank you, Ingrid. That was great. As you see, we've had technical difficulties. This is the second time that we do this class, so it's not as easy as you may think. And for those of you that have done it, I congratulate you, because I mean it takes effort and guts, and you know, for the most part, we're all like handicapped when it comes to talking on camera and being technical. But I mean, we're definitely trying. I welcome you to do the same thing, to step out of your boundary, your comfort zone, and do the things that, you know, make you feel uncomfortable, because typically those are the things that make you grow even further. So with that, I mean, get uncomfortable as much as you can. I know that most of you may have questions. If you do, feel free to reach us. There's some information on the screen right now where you can contact us by phone. You can email Ingrid. We'll be more than happy to answer any questions that you have. If we can help you with any pre-CD, any any questions regarding the industry, we'll be more than happy to do so. We're here to help you. We're here to work as a team. You know, like I said from the get-go, that's the philosophy that we have as a company, and we want to make sure that not only you but the customer is well taken care of, so we can obviously have more return business. Again, Ingrid, thank you very much for everything that you did today. I really appreciate it. Thank you, Maite, for handling a little bit of technical issues. Ingrid, I don't know if you want to add anything else before we actually leave. Well, I think I'm being told that Ingrid had to run to the restroom, so that's part of doing this thing live. Again, thank you for participating in the class. We'll definitely reach out to you with any of these questions that are probably coming in. And I thank you again for participating. Have a great day. Stay safe. I know it's just crazy what's happening out there, but you know, the most important thing is, you know, wear your mask, keep your distance, try to, you know, contact people as much as you can via phone, virtual showings, things of that nature. Stay safe. Have a great day. Bye-bye.